Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, March 13, 2026, and here is everything you need to know as the markets close for today. It was a bruising end to the week on Dalal Street, with bears firmly in control. The indices logged their sharpest weekly fall in over a year as surging crude oil, a record weak rupee, and relentless foreign selling triggered a broad-based risk-off move. The Nifty 50 closed near the day's low around 23,151, down about 488 points, a cut of roughly 2.06%. The Sensex ended just under 74,564, lower by about 1,470 points, or 1.93%. Bank Nifty fared even worse, finishing near 53,758, down roughly 1,343 points, a slide of about 2.44%, and closing below a key prior swing low. Market breadth was extremely weak, with well over 3,000 stocks ending in the red. Total market capitalization on the BSE shrank by nearly 10 lakh crore rupees to just over 430 lakh crore. Sentiment was hit by escalating tensions in West Asia, crude oil hovering close to three-digit levels, and concerns that higher imported inflation could force a more hawkish tone from central banks globally. On the currency side, the rupee weakened further, with the dollar-rupee pair closing near 92.46, after briefly hitting a fresh all-time low in the 92.47 zone intraday. That record-weak rupee keeps imported inflation risks alive, especially for energy and dollar-priced commodities, adding pressure on rate-sensitive and oil-intensive sectors. In terms of stock-specific action, heavyweights and cyclicals took the biggest hit. On the Nifty, Larsen & Toubro tumbled more than 7% as investors took profits in capital goods, amid worries that a prolonged oil shock and higher funding costs could slow the capex cycle. Metal majors, Hindalco and Tata Steel, slumped roughly 6% and 5% respectively, while JSW Steel and Grasim fell between 4 and 5%, reflecting fears of squeezed margins from surging energy prices and global growth uncertainty. In the broader market, mid and small caps like Amber Enterprises, Mangalore Refinery, PCBL and Hindustan Copper were down 5 to 8% as traders cut leveraged positions. On the positive side, safe haven pockets shone through. Tata Consumer products gained over 2%, and Hindustan Unilever climbed close to 1.5% as investors rotated into defensives like FMCG. Foreign portfolio investors were heavy net sellers, dumping almost 10,700 crore rupees in the cash market, while domestic institutions bought close to 10,000 crore. On the levels front, Nifty slipped through 23,500 and touched an intraday low near 23,112 before settling just above it. The index now sits in a key support band between 23,000 and 22,950. Below that lies 22,750, with extension risk to 22,500. Upside resistance is between 23,450 and 23,500. For Bank Nifty, closing below 54,200 turns that into resistance, with supports at 53,500 to 53,400, and deeper at 53,000 to 52,600. Sector-wise, Nifty Metal plunged nearly 4.8%, followed by autos, PSU Banks and media down 3 to 4%. FMCG slipped only 0.5% as a relative outperformer. Nifty Midcap100 and Smallcap100 both lost over 2.5%. In the regulatory and macro backdrop, no fresh SEBI circulars today impacted index futures and options. February CPI ticked up to 3.21%, still within RBI's target. RBI conducted a planned open market purchase of government securities, injecting liquidity. In commodities, crude oil hovered in the low to mid $90 range, up nearly 50% over the past month. MCX gold futures for April traded around 1,58,000 to 1,60,000 rupees per 10 grams, down 0.5 to 1% from recent highs. MCX silver May futures eased towards 2,63,000 rupees per kilogram. Geopolitics remains key, with West Asia tensions pushing crude higher, strengthening the dollar, and driving the rupee to record lows. This has prompted foreign investors to trim emerging market exposure. Looking ahead, Nifty's focus is holding 23,000 to 22,950 support. A relief bounce to 23,450 could happen if crude stabilizes, but a break below opens 22,750. Bank Nifty eyes reclaiming 54,200, otherwise supports at 53,500 beckon. Volatility stays elevated, so watch global risk sentiment and crude. One actionable takeaway: respect the downtrend but avoid panic. Use bounces to 23,450 on Nifty or 54,200 on Bank Nifty to lighten longs or consider managed shorts. For investors, accumulate quality names less exposed to crude during this volatility with tight stops. That's it from me, Prem. Send in your questions on stocks, sectors or levels and tune in for tomorrow morning's update. Stay tuned and keep those questions coming.